Fear of missing out is driving retail investors. Let's have a look. Good morning everyone, Florian.heise here and welcome to another episode of HeiseSays. I have my morning stein of coffee that I'm working through as always, and I thought this Sunday we'd start the day by having a look at an article from the ABC that's discussing new retail investors. Now we've talked about this in similar articles, with everyone being forced house arrest, lockdown, bored at home. They are diving into the market. And things are looking like they're a good deal. You know, they're comparing it. I'm just bringing up trading economics here so we can have a look at some recent, movements in the market. We'll bring up the ASX 200. You can see here on the chart, psychologically, we're used to hearing numbers over 6.5, over 6,000. So when it's down here, it all seems so cheap. Same thing on the Nasdaq. Same thing on the Dow Jones. But then there's the example of all the retail investors piling in to Hertz when pretty much bankrupt. So let's have a look at this article, everyone. Let's have a look and see what we can take away from it. So first-time share market investors take a punt on the pandemic recovery. So they're expecting a V-shaped recovery, a quick bounce back. I'm hoping there would be a quick bounce back. I'm too cynical to see it. I'm waiting till we start to see profit releases from some of these businesses. But that's probably too old school and boring. Tens of thousands of Australians stranded at home over the past few months due to the pandemic have taken up a new pastime, trying to make money trading shares. For some, like Eleanor Wilson, that gain has been spectacular. I'm up about 35%, she tells the business. Oh, fantastic. The 21-year-old from Brisbane, who studies law part-time while working at a property company, says she was looking at her phone one day a couple of months ago and saw the share market was down 30%. And I thought if ever there was a time to get into trading, it would probably be now, she recalls. And, okay, this was only written a few days ago, so it was released yesterday, so I'm wondering how she's done now. I can tell it's Queensland because of the VJ on the walls there. My sense of FOMO, there you have it. And missing out on the big gains was my impetus for getting involved. And, with the printing that is happening, with the money printing and the bailouts that's happening around the world, maybe you got to be in it. Like many other people pushed out of their day jobs due to the pandemic, professional rugby player Jack Dempsey turned to shares in a bid to recover his lost income. We're 2 months into paying cuts and I've already made back what I would have lost and some more as well, he says. David Iker is currently unemployed. He withdrew all his super from the government when the government allowed it, $9,000 worth, and invested it himself. So this is the thing. Having the $9,000 by yourself and using it yourself, good on him. It's probably he's got a chance of making more money if he controls it without the fees. But if he's stupid, he could lose it all. So that's life. I don't know if anyone really knows what the market's going to do, so I'm not going to pay an advisor to use my money, he explains. So far, the strategy appears to be working for him. He says investments are up by more than 2/3. A good amount of cash to have for doing nothing for the last month and a half, he quips. But you've got to see. We'll have to see. Do you think they'll actually do a follow-up article about all these people? You know, how they've done now. Maybe they went heavy in banks and the banks took a big hit. That's the thing. Your profits can disappear in an instant. If you're in it for the long term, then you don't really care about these day-to-day movements. But there's so many unknowns. Not too much method to the madness. But his methods are unconventional, at least as far as professional investors would be concerned. He doesn't read the company's accounts or considers key business metrics such as earnings per share. I don't really bother with all that stuff. It's a bit too much effort for me, he says. I'd just rather see when it goes down and buy and hope it goes up again. That's my strategy. Okay, well, that is a strategy. He's playing the market. He's playing the movements. Good on him, buying Sure, so long as he's got risk mitigation strategies in place, he might be on a winner. But then he might pile into something that he thinks is a surefire winner, which isn't. Wilson has a slightly more scientific strategy. A lot of gut feel, not too much method to the madness, she says. I look at what's crashed the most and then see whether they'll survive the long term. I don't look at the accounts as much as I should, but I kind of look at how much debt and equity they have, and I kind of just go off that. Unlike many amateur investors, Dempsey has benefited from connections with the professionals. I got a few mates who work in the finance sector, and essentially just reach out to them, he explains. When I thought about diving in, one of my mates said it's probably a little bit too early because it's going to keep falling, so that was quite lucky because there was another massive fall. However, the Wallabies and Morita star admits his investment process is not strictly scientific either. It was a combination of advice and a gut feel looking at the broader picture and the next 6 to 24 months around which areas would have the most growth. Wilson says her gut feel is that tourism will rebound big time. Okay, will it? I mean, maybe it will. Maybe the shares will, but will the industry? What will happen when JobKeeper disappeared? I went a lot into the travel industry. I just thought people are going to want to go and travel as soon as this is all over, she explains. She isn't alone. The hard-hit travel and tourism sector seems to be the investment of choice for many amateurs. I mean, there you go. Look at Flight Centre up 90%, Qantas up 133. So they're outperforming, but they crashed, guys. Flight Centre crashed, really hit hard. What do you think, everyone? What do you think? Have you gone hard in Flight Centre or in Qantas? Are you putting it in travel? I guess once it's bottomed out. Or have you bought oil tankers? Companies such as Qantas and Flight Centre have outperformed the broader stock market during the recovery, just as they were hit much harder during the collapse. So the trading account boom has Regulator worried. Since March, the number of new share trading accounts opened daily more than tripled. Greg Yanko, the ASIC executive director responsible for supervising markets, is noticing a worrying pattern emerging. On basically 2/3 of the day when retail traders are net buyers, the next day the market went down. And similarly, when they were sellers, the next day the market went up, he said. So, I mean, most people lose money on trading. I'm watching Dave Ramsey's stuff, and he tells people never to invest in individual trades. Other people, target. Well, there are some people that have a systematic approach. They do, but here's the thing: you need to spend time and learn how to do it properly, and you need to have the emotional fortitude to continue with your position and have strategies in place to mitigate your risk. At least that's my understanding of it. I've stepped away during these crazy times because I'll probably spend more time staring at the phone and watching it go up and down. ASIC is most concerned about inexperienced day traders, people who look for quick profits by buying and selling shares without holding them for long periods, and suggests getting advice and practicing before committing real money. Make sure you don't invest or trade more than you can afford to lose, Yanko warns. Exactly. Ali Wang is basically following that advice by only investing amounts she can afford to lose if the market goes back down. I put in small sums that I'm willing to lose, she says. If the company goes bust, well, too bad. No more coffees for the year or no more clothes. New clothes. But so far, Wang's wardrobe looks safe. So far, I've pretty much doubled what I put in. I'm so glad about that, she says. I'm really tempted to sell off, but I'm playing the long-term game here. Here's the thing. There's nothing. Are they going to mention anything about people losing significant amounts? I mean, look. Is this it? Have we hit the bottom? Has this been the bottom? 4,000, or can we retrace back down to it, guys? Or if we look at a 10-year figure. I mean, oh no, sorry, I need to go 25 years. 2008 GFC. Look at that dive. We'll just move that over. Oh, you can't see my hand when I'm touching the screen. Just move that over. Let's will we retrace down to 3.5? The recession hasn't even hit yet, everyone. All the support mechanisms are still in place. Or am I being too boring and fuddy-duddy? Is now the time to go in the long game? It won't be a long game if the ASX 200 goes down to 3,000, will it? Chris Britsy, who runs robo-advice firm StockSpot, says it's unusual to see retail investors jump in at such an early stage of a share market rally. Usually it takes a while after the markets recover before you see mum and dad investors start to get interested again and be confident enough to invest. This time it's happened a lot faster, he observes. Bought in at the ground. Wilson says she is also relaxed about her investments, especially given the returns they've generated so far. Well, no, you haven't got a return until you sell. You haven't got a return until you sell. For the minute, I'm pretty comfortable with what I put in and the results that'll come out of that, she says. I'm in it for the long run. Dempsey admits that there's an attraction from the risk of share investing. There's an element of trading that's like gambling. It's paid off at the moment, but I'm hoping for more, he says. Okay, so here's the thing. The way he's doing it is like gambling. However, he's also confident that he picked a low point at which to enter the market. The biggest risk that I'm worried about is a second wave of the pandemic, he adds. From my point of view, I bought in at the ground level, so I'm not too worried about being worse off as a result of some catastrophe. At least for these young investors, there's plenty of years to recoup the losses if their investments do get swamped by a second pandemic wave. And that is the best point of this article, really. Everyone is a genius when the market's going up. Everyone's a genius when the market's going up. And here you go, new share trading accounts. Have a look, guys. Have a look. Wow. So, I guess we'll see, some positive stories. I mean, it's good that more people are getting interested in finance and more people are getting interested in investing. I mean, that's great. You just don't want people to dive in and, well, no. Sometimes they need to learn by losing. If you're sensible and just make sure you're not taking too much risk, good on you. Good luck. Good luck. What do you all think, guys? Do you think we've hit the bottom? Or are you, shorting? As always, let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and would like to support the content I create here, there are a few ways you can. Simply watching the channel, liking, commenting helps the algorithm. YouTube loves that. You can support us financially by joining the channel on YouTube or Patreon, or via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, have a great Sunday. I'll see you in the next video.